Kush is here. Some of his calls were on that Shagun stocks list. Anything you want to add, Kush, after looking at the session today?
Interestingly, a couple of other stocks that I mentioned, were HDFC Bank and Reliance. Now, no matter how cautious my view is on the markets, I think from a year's perspective, Reliance has actually come to a point where it's starting to look, very interesting, at least from a medium-term perspective. Could see some more pressure because of the kind of heavy volume backed move that we've seen recently, but it's starting to consolidate. I take heart from that fact. And HDFC Bank, we've spoken time and again that for the last 4 years or so, it's hit this 1700, 1750 zone about 10 times, about a little more than that, and then given way. For now, at least, for the good part of this month, it's holding above that 1700 mark, consolidating with some positive bias. So I think there's a big catch-up trade that has to come up on, HDFC Bank. So this too could, play out, and 1875, 2000 other levels to look at on the upside. So along with, Emphasis, Skipper, and RVNL that we've already discussed, I think from the large cap names, Reliance Industries and HDFC Bank, the two big ones should be kept on the radar and perhaps can be considered for buying from a medium-term perspective as well.
Kush, there are a couple of stocks in the broader market universe that are actually not doing too badly today. Maybe the volumes may not be too supportive, but nevertheless, and I know we've talked about some of them extensively in the last few months, but look at Vodafone. I don't know what's happening there, but the counter is up 5%. Brigade is up nearly 6.5%, 7%, and Poly Medicure is up 11%. You've also got NCC, RBL Bank, M&M that are upwards of 5%. Anything about these 5-6 names that I've mentioned that could be a good trade buy today, maybe sell Monday?
We perhaps could have done that with the Poly Medicure yesterday because that was our pick in the closing, in the closing show. In fact, about 2700 or perhaps even earlier than that, was when we recommended for the first time. Yesterday was like an upgrade. 3200 was the second target. We're getting there on the back of good volumes. Now the stock is entering overheated territories. So now is the time to take some money off the table. Good momentum, so don't book it entirely. But about 50% is a good idea to, book and perhaps wait for any kind of dip in Poly Medicure. Nothing meaningful has happened for me to change my view on Vodafone. The downturn has been staggering, and nothing to say that any kind of meaningful turnaround might come about. I am okay to miss a 20%, 30% kind of a rally, before it crosses its 200-day moving average around 10.5, and then perhaps consider if at all a trade has to be made. So for me, Poly Medicure continues to remain a buy, albeit on dips now, and M&M. That's one stock from the auto space that is consolidating around that 2600, 2650 mark, has made a good base, could see a rebound from here. So that's one stock that you want to consider from the auto space.
Okay. Thanks for that, Kush. Well, let's get in two more voices. Firstly, Abhay Agarwal, Managing Director, Piper Serica, with us, as is Deven Choksey, Managing Director of DRChoksey Investment Managers. Gentlemen, both of you, thanks so much for joining in. And to you and yours, from all of us, a very happy Diwali and Saal Mubarak. Abhay, you are probably not so constructive, but today's the day wherein you still shed all of those inhibitions and talk about what looks good. So let's try and talk about what looks good amidst a scenario which may not be the best.
Yeah, Neeraj, first of all, very happy Diwali to you and the viewers, and wishing everybody a great Samvat. Yeah, you're right. I think based on the earnings and based on the cyclical slowdown that we are in, I think the earnings outlook will keep getting adjusted downwards. So in that scenario, it is difficult right now to see what will drive the Nifty index level over the next 6 to 12 months. So what will happen then is that to make returns, the equity investors will need to find those themes and those stocks, that will outperform in terms of earning growth the broader markets. And I think that's where the good news is, while the overall market, the Nifty itself, the large caps may go sideways, devoid of any earnings good news or earnings momentum. In the broader market, there are opportunities that exist. There are a lot of new companies that have got listed over the last couple of years, Neeraj, that have now started to find feet, and in very exciting sectors that we believe are, potentially multi-baggers. And there is domestic CDMO, the space that we talked about, companies like Windlass and Acoms, And these are not my buy recommendation, I'm just talking about sectors. Then there are companies that are catering to semiconductors, complex electronics, companies that are focused on exports. And I think there will be a big government thrust to exports. There will be a big government thrust to replacing imports from other countries, especially neighboring countries. So I think in that positive macro environment, these are mid-cap, small-cap companies that will become multi-baggers. We are very confident of that. I think the investors would just have to do the hard work of finding them and staying with them through the market volatility.
Okay, that's Deven Choksey also with us. Very, very happy Diwali to you, Deven bhai. And thank you so much for joining us on this, auspicious day. What do you think is going to be the turnaround story in the next 3 to 4 months? Is it going to come from banks? Is it auto? And would you stay away from IT?
Yeah, at the outset, I think wish you happy Diwali to all of you, and my prayers to God for health, happiness and prosperity for every one of you and all your viewers. Well, I think what could change the scenario? I think that's a big question. And in my understanding, I think this market is giving you a perfect answer. Already we are seeing, I think, a price correction of a sharper degree in a span of less than a month. And at the same time, I think as the habit of the market is, it will probably, I think, try and get into some kind of a time correction. So if my reading is right, the third quarter and the fourth quarter, both these quarters are going to be, I think, involving some amount of time correction for individual stocks. And within that, probably I think some of the large cap stocks would start to strengthen first and then start going up in a gradual manner. So that is where I think our understanding on the subject is. Now, what could be the trigger point here? Well, I think there can't be any one or two trigger points. I think it will have to be coming along with. Maybe I think the first point that one is looking at, the interest rate scenario will have to become softened. I think currently the rate of interest, I think at which they are, maybe the confidence level to the corporate, I think if it is required to be given higher, then probably I think the higher confidence would come only when I think the rate of interest comes down. And that's what we are expecting in subsequent period of time. With the good monsoon around, the demand itself I think is suggesting it's a good demand going forward as well. So we think that I think it is a demand revival, and at the same time government's expenditure on the infrastructure, which is expected to pick up in the third and fourth quarter, could be the catalyst I think in generating a higher amount of order book for the companies in the third and the fourth quarter. So it's going to be a buy opportunity in my understanding when the correction takes place in the market.
Abhay, hi, happy Diwali. It's Samina. So while I know we I guess we resonate with the fact that the global setup looks tough, and the fact remains that we have borrowed returns from the future. So any sort of correction, some may believe, is actually healthy and well timed. When we look at it structurally, no one's arguing that the India story is still very intact. But post-earnings season, which largely most people agree, barring a few sectors, might have been a disappointment. But anything from the 57 sector universe that we've seen, there must be something you like, right? Something where you see value, where you see the risk reward is in favor of the investor.
Yeah, Samina, of course, we are very, very bullish on the long-term, medium to long-term prospects of India as an economy, as a country, and as a place for equity investors to be. It's just that in the short term, we are worried about the cyclical downturn, which is par for the course. When economies grow like this, they take a pause, they form a base, and then they grow from there. So that's where we are. I'm not so worried about the medium and long term. And there are opportunities, as you said. We are very constructive on the entire insurance space, health, life, non-life. I think, that is a space that has seen sideways movement of price. As a result, earnings have grown, valuations have fallen, and are now quite attractive for the growth that is there in front of you. So insurance as a space looks very attractive to us. Pharma as a space looks very attractive to us. I think some of the Indian companies have phenomenal product pipelines, which analysts are not looking at carefully. And when these, like what happened with Cipla yesterday, when these products come into the market, they will be game changers for the pharma industry. We are very bullish, or starting to get bullish on the entire metal space, because if China reflates, it will lead to re-rating of metals which are trading at abysmal levels still because of China dumping. So I think there are sectors like these where great opportunity for astute investors to, make their picks.
So we have the session has shut, and I would say not half bad. Nifty didn't quite make it to 24,000.
I want to see the FI sell numbers today.
I think that's why we managed to close
43 sessions, right? What did you say last day?
23.
23, yeah, there are only that many days in October.
Hey, लगता है ऐसा है कि 43
So
sessions.
it felt, but 23, but feels like 43.
43. So I want to see it today.
So FIs have
But do you think that we
taken
know
a break
FI
from
selling? It is Friday and Europe might be still open for all you know.
Oh God! I think,
And Wall Street may be giving
I think the point being maybe that's what's responsible for the uptick that we're seeing.
Missing FIs.
So yeah, missing FIs who are like taking a break, maybe Diwali break from dumping Indian equity. But Monday onwards, you might see that pressure coming in. All right, let's see how we've closed, and let's pull up the Nifty heat map for you. Auto is the story of this session, and let's be honest, this session is more about symbolism rather than any big move. But M&M, they're doing really well. ONGC as well, some of that auto pack doing well. On the broader markets, Poly Medicure has been the star of the session, as is Piramal Pharma, RBL Bank, Brigade, Vodafone seeing that big pump up, and Motilal Oswal jumping about 4% at the closing session. Abhay Agarwal, just would you look at auto more closely in light of the numbers that have come in, the sales numbers? You think that could be one theme, one story for the start of the next week? You talked about metals, which is also very important because we'll have more information coming in on what China is doing to boost their economy.
Yeah, I think on autos, we have been fairly negative for last 2 quarters. And Tamanna, that is because the channel inventories continue to pile up. So while auto companies have shown good sales, they have not translated into sales at retail level. The last check that we did last week, we found inventory levels to be above 80 days, which is extraordinarily high. I have never seen in 30 years inventory levels of 80 days plus, even in the COVID times. So there is a structural problem. Buying has slowed down tremendously. So I will not be surprised November, December, January, we see plant shutdowns for 3, 4, 5 days, which used to happen earlier. Mahindra, Maruti used to take plant shutdowns to cut inventory. I think we are headed there. So I will wait for at least a quarter more of retail sales picking up, inventory getting cleaned before, we start looking at buying anything in the auto space.
Okay. Before buying in the auto space. Okay, Abhay, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time, and have a great festive season. Deven bhai, 30-second answer. You've told us what you will buy. What is it that you will avoid?
Yeah, it's a big question. I think the valuations, when they are expensive, I think that's an avoid. Now, whether there is a sector or a company, I think it would be more of a company-specific answer. That I think where the valuations are expensive, I think I would be very, very careful about adding them into portfolio, because those stocks can really underperform for a long period of time. We remain constructive about, I think, the possibilities of commodities, and metal as a commodity, they remain, I think, relatively a good opportunity probably in next 3 months or 6 months from now.
Right. Deven, that's of course what you're avoiding, but 2 quick sectors, if I can get perspective from you on, is IT and pharma. And the reason I ask about these 2 sectors is because their outlook is largely driven by what happens outside this country. Are you constructive, or you'd wait it out before you dig into some of these IT pharma names?
So within IT, engineering R&D companies, they look relatively more promising, more reassuring, largely because of the fact that the verticals in which they are operating, they are probably, I think, some of the best customers that they are catering to. So we remain constructive about the engineering R&D space within the mid-tier IT companies. Not so much confident about the frontline IT companies, though we believe the worst is over for them. As far as the pharma is concerned, yes, I think the look for those companies where the complex generics, the specialty generics, are the ones, I think, which are probably driving business and the growth for likes of Cipla, Sun Pharma, and Dr. Reddy's. And similarly, I think the CDMO and the API business for likes of Divi's and Laurus, they look relatively more appealing now than before. So certainly, I think one can look around for these kind of companies at a corrected price level to buy them into the portfolio.
Okay, one last call from Kush. If you have any more left to give, Kush, for Monday's trade.
Plenty more.
That's the spirit.
कितना पैसा है भाई आपके पास?
पैसे तो आपको लगाना ना, हमें तो call देना है.
Here's the ideas.
No. I think amongst the railway names, some of the names that we've already mentioned have started to do well. RVNL was one such stock, but if you see the jump up on Texmaco Rail, Texmaco Infra, phenomenal, and it's a sustained move over the last 8-10 sessions. While the volumes are thin, and as you would expect on the way up, because the market is a little skeptical right now. But I think some of these names are starting to do well. So I'll have JWL, Jupiter Wagons, Texmaco Infra, RVNL on my radar. RVNL we've already discussed extensively. Texmaco Rail is one more stock that I want to put on the viewers' radar. On the downside, the support for this one comes in at 110, so that should act as your stop loss. And this is of course for Monday and the days to follow. And on the upside, you're looking at a 122 and a 130 as your target positionally. So one more addition to the railway pack.